Good evening, this is Nick Inman from VolumeProfileTrader.com on Wednesday, November 9th, and we're going to cover the S&P futures contract here. First things first, today confirmed yesterday as a fake out, just for the fact that we gapped lower and basically traded, we had a test of that important 1246 level on the S&P, and we failed, and we traded lower from there. And what I find important now is our point of control for the last month is this 1233 level, and price is currently below it. Now that doesn't mean that the market's, now the market's going to take a dive lower. I think there are some important levels on the S&P that we can track right here, right now for the last 30 days. The first is the 1210 level. And what we're looking at here is it's the bottom of the channel using the Donchian channel. It's the first. I think this is the first time I've mentioned the Donchian channel, but it's my ultimate preference to channel stock. I also like Bollinger Bands, but I like to stick to Donchian. Something about the formula makes sense to me. So, as we see the market in its current state, right tool for the right job, we see what's going on here. And if I just connect the lines, we saw our lows in October make a monster move higher. And then we had a slight upside bias and basically a blowout top. And that blowout top ended up being a pretty significant level, 1290 on the S&P futures contract. And now we're seeing some sideways consolidation from that blow-off top being our reference point for the highs. And just because, we saw the blow-off top in hindsight, and now we're looking at what the market's doing now. Well, what are important levels that we're looking at in this range? We have to determine that. And for the bottom, for support, it's going to be this 1210 level, which you can see on the volume profile. It sticks out. We had our last week's lows were at those levels, and a few weeks ago the point of control for the week was at those levels. So there are a lot of important levels at this 1210. It means a lot of different things just in this 30-day time period. So other than that, we have 1234, 12 to 1236. That's our point of control for the month. And what worries me is on a bigger time frame, as we talked about yesterday, and how the point of control ended up at the top of the day and it ended up selling off. Yesterday's point of control, you can see it finished at the top of the range, and we saw that blow off top from a couple weeks ago. That was this 1275 level. That was the lows of that heavy volume range in that price range. So we saw our sell off from those levels, and today's action shows you how we had our point of control form in the middle of the range at the it's that 1246 level, and it's where the market has been basically pivoting around for the last 4 or 5 days. And now that we're below that, it's a little concerning to me that in any strength there's going to be more selling and eventually a market rollover down to new lows. So there's that concern with me, and clearly with Italy's headline today and how it moved the market, Europe, and any bad news that comes out of Europe is going to really affect this market for the negative. So I think that means, unless if there's a true solution that the market likes in Europe, that if you're buying the market, it makes sense to either buy a lot later than you normally would, or to use a hedge of some sort as downside protection, because you don't want to get caught in the middle of this mess and basically getting chopped up, selling the lows, buying the highs. You don't want to get in that habit. Right today, when the market started to break down, you should have found yourself, you know, in this range, you should have found yourself selling some stock that you may have owned from higher prices, but all it is discipline. Because if we see a lower high, which is possible, that could trigger a lot more selling pressure. It could be the next leg lower on a bigger time frame move. So we could see a 10% move, or basically not backing away from 1150 on the S&P. There's that possibility, and you don't want to be holding stock 100 S&P points higher than, you know, where the potential lows could be on your next time you buy. So all in all, it's this current pattern that we're seeing in the S&P. It's a do nothing right now. If you want to speculate to the downside on the idea of more downside move, then you can, and you know your reference point. You definitely don't want to see it get back to the 1275 level. But today's gap and roll over, basically, that's an important level. We traded, and honestly, I was expecting a little more upside. And when we started to fail at this 1250 level, which has been a key level, we started selling off. The selling pressure got a lot heavier, and people weren't waiting for the rise in the market. They were selling into what little strength there was today. Okay, I want to move on to Apple. It's a name that we've been covering as I get rid of the lines. You can see here was the trend in Apple, and now we're just in sideways mode. You can see the Donchian channel. It's moving sideways, ratcheting both up and down, but not doing a whole lot. The whole moving average, it's just trading fairly, it has a little bit of trend to it, of steepness to it, but definitely not like we've seen, not like the swings that have been, really good swings in Apple. We're not seeing that like we were, so it shows us that we are in consolidation. Today, this is just my trading and what I decided to do today. I initiated a bearish bet on Apple. I bought the 395 puts expiring in December, and I sold the 380 puts expiring in December. And I paid a total of $5 for this trade with the opportunity to make $10. So I'm looking for Apple to start making new lows with the expectations that this point of control and the move we saw the last day in Apple is enough to keep the momentum going to the downside and to make this trade profitable. To cover GM and other names that I covered last night, saying they were a buy on weakness, well, just one thing. I wasn't expecting the market to gap down like this and to keep trading down. GM down 11% today off of earnings. This Europe story, it's completely got a hold of the market, and I can't control that. When there's any kind of positive news flow, the market tends to move higher, and when there's negative news flow, the market really gets hammered. So it's one of those things where if trading isn't profitable for you right now, maybe it's time to sit on the sidelines until the visibility is a little clearer. Be more prudent with your opportunities and let the position work for you before you add on to the position. So the other names that I covered last night, I think I covered gold, although I'm not 100% sure. but it looks like we're at a short-term top on gold. If you are profitable in a position that you've bought from down at lower levels, then and you want to take some profits just to raise some cash, then go ahead and sell a little bit of GLD. But this still makes a lot of sense. There's so many, basically anything bad that happens in the world, gold should catch a bid to. So the only downdraft to gold may be a strengthening. Gold in dollar terms is a strengthening dollar, US dollar, and it's interesting how we've traded in the dollar after this reversal pattern, 75 on the Dixie. We're really starting to power higher, and our back test of that range was next to nothing. It basically back tested to the consolidation pattern before the ultimate breakdown and recovery. So if we're looking at the dollar, then it's appropriate to look at the euro and look at this monster reversal pattern. It's unfortunate. Just to tell a quick story, I was going to put a trade on in the euro. What I was going to do was I was going to sell some calls, a call spread, and I was going to do that right at these highs because I saw this point of control and how it was an important level. But I shied away, and I thought, given the move that we had in October, maybe I should maybe not saying that I wouldn't have made money on the trade, but maybe I'll just let it play out and I'll sit on the sidelines for this one. Well, it's maybe instead of selling calls, maybe I should have just bought puts, because that clearly was the trade. And the euro's getting pounded, and that's negative for the equity market. What is the downside support for the euro? And let's figure it out right now. So the euro, it's really violating some levels, the point of control where we would want to see support. We're not seeing that in the euro, and it's making lower lows and lower highs, and that's very important to recognize right now. Our last recent, major consolidation pattern, well, the back test of that consolidation pattern, we have the breakdown, and then we have the throwback to where it broke down, and we got complete rejection. And now we're looking for some type of support at this point of control over the last 2 years. But from the looks of it, just for today, I would say 1.35 is our level in the euro that we're really looking at. And if those levels don't hold, I don't see why this euro doesn't move back to the lows that we saw, and which is the value area low. It's just looks like that's what it's going to do. And if I look at the Dixie one more time, you can see this thing looks like it's breaking out. And we see the down move, and we see our consolidation pattern, and now we get a breakout and a test of the breakout, which is the point of control on the dollar, and now we're seeing a move higher. What's scary about this is a bigger time frame move, and I expect 80 on the dollar, and our first target we're close to, which is 78.5. If we breach those levels, then 85 is where we're 80.5 to 81 is where we are going next on the dollar, which is market negative. But you can see what's happening here. This point of control being below price, that's a very strong indicator for the dollar and to go long the dollar, which means to sell stock and raise cash. So to wrap it up, I'm going to say that we've probably established our range we have established levels for the rest of the year and where we should be bracketed in. I don't expect new highs, although let's say first things first, anything's possible. We could always make new highs and we could always make new lows given a black swan event or some miraculous cure to all the debt woes around the world. But we see our important 1180 to, let's just say 1180 to 1190 on the S&P. That's generally speaking, that's the level that we want to ultimately see the buyers support. And on the upside, we see resistance at 1275 to 1290. Those may be the highs of the year, but if we break above that, then it's to 1310 up to 1330. So those are our real boundaries if you're looking for trading opportunities on a bigger term time frame. I'm talking, this is a 2-year chart. So if you're waiting to buy at these levels, your expectations when you buy at those levels should be a lot higher. You should be riding out the little wiggles in the intraday moves on the expectations of, hey, I'm buying here at major support. I should see a decent move to the upside and make my risk reward ratio go in my favor. And that's the same idea with, any time frame. It's just the expectations are different. So, but the risk reward should not be different. So we see our levels. We see we have a lot of filling in to do in terms of volume. So on any weakness, if the market holds, if we see weakness and the market comes down to this 1180, 1190 level, we're looking for buyers, and with buyers, we will join them for an upside move back to the general top of the range that we've seen. If we rally from here, which is the value area high over the last 3 months, if we rally from those levels, we want to see a decent move higher. But given the reversal that's occurred over the last few days, which has been pretty nasty, this market sure looks poised to take a leg lower, which puts your target at lower levels. This looks like a bigger time frame move is what I'm trying to say. So, and if that 1180 level fails, then this 1150 level is an area of importance, and then ultimately the 1120 to 1100 level on the S&P. I wanted to say one last thing. I'm going to be creating some more. Well, I'm going to provide it for members, a trend and chart pattern, not tutorial, but I guess an education course. And what I want to do is use real trade examples, and perhaps what I'll do is just keep it like a live update thing. So when chart patterns form or whatever the case may be, trends are forming in various time frames, we can cover them, and I'll just archive it in the respectable page, whatever the case may be. So I want to provide the best service for you, because this is going to be something that you're going to build upon as a trader to improve and really profit from the market. So anyways, I'll end it on that. This is Nick Inman from VolumeProfileTrader.com. Have a good night.